Hey traders, this is Ron Hayden at Market Tamer. Happy Tuesday. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed by your financial advisor. We'll kick off here with the best performing ETF today, which were the Qs, up $5, 2.91%. Volume almost 70 million shares. I wish it was more, back up to maybe Friday's volume, but hey, it was an up day and closing near the highs of the day. The target to the upside, 20-day EMA in red around 179. Then the 50-day in orange. That's right now about 181.5. It's 181.62 to be precise. So that area would be the target right now. If we get up in there and we're rejected, the target goes right back to the 200-day. If we close above, then we go right back up to the all-time highs. It's really that straightforward. If we take a look at the diamonds, they were up 2.21%. 200-day held just like it did in purple back in June and July. Big institutional moving average. Volume, again, less than Friday, but we closed at the highs of the day. Now, from a coagulation perspective, if you will, the 20-day in red and the 50-day in orange are both coming in at 260. That really only leaves about $2 upside before you hit that resistance level. If we close above both, then it opens the door back up towards 268. That could be $8 of upside. So we'll see what happens here. Just like on the Qs, if we hit these moving averages, we get rejected, we close the lows of the day, then boom, right back down here would be the target. The IWM was up 2.9%. Volume was better than Monday. The 20-day in red is there. 200-day in purple is there, which is an institutional moving average. We clear both of these, we go right up to the 50. If we were to come up in here, get rejected, if I zoom back out, so we come up here, we get rejected, finish lower, target right back down to the lows around 150. SPY, which I do have a bullish position in. If I zoom in here, volume 117 million shares, a lot less than Friday, but again, closing near the highs of the day. We're above the blue line, which is the 5-day EMA. Target right up there, ballpark 285. We close above both the 20-day in red, 50-day in orange, then the all-time highs back up around 290-250 would be on the table. I did comment about how this little pennant was drawn in, right? If we break to the upside, there is the target. We break to the downside, it's like yikes. Maybe a little support here, but then this big support zone, mid to upper 250s into low 260s would be the target. Well, here we have our break. It was one way or the other. Now we know what the target is. So a couple dollars higher, ballpark about $4, $5 higher until you hit some resistance again. MDY, your mid caps, 2.13%. They performed the worst today. Target right around 355, right at these two moving averages, then back up to the 50-day, then back up to the previous highs. Of all of them, the Dow is the one that looks the most visually easy to figure out. If we take a look at $VIX, the VIX crashed 17% today. We've definitely rolled over. This is corresponding with the markets ripping higher, so the VIX is acting as expected. The bank stocks using the ETF XLF, they were only up 1.67% today, did not even get above the 5-day. So the banks were one of the laggards, considering the markets themselves did well. A little bit of a push higher, you come up to 275 and then these moving averages. Now Netflix, we'll take a look at just a few individual stocks. Netflix is surging after hours. I'm doing this video, it's about 4:47 or so p.m. Eastern. Closed at 346, already up $13. Now you can tack on another 40 some bucks. Not bad. It was up as high as 391 from what I saw. So if I zoom in here, 400 is right there. We were a little below that. Right now we're down in the 380s, which is going to be right about there. So right now we're challenging this previous high. Once we see how the option prices play out tomorrow, we can take a look at the aftermarket, or we can look at the prices once they close tomorrow to see how this aftermarket move tonight and tomorrow plays out. Because we have looked about the at Netflix and the expected move, which I think was like 30 some dollars. We're getting more than a $30 move right now if you account for today's move too. So we'll do this as an educational example, most likely in Wednesday night's video. Tesla was in the news. Reportedly, the judge accepted the SEC settlement. The stock was surging a little bit today. I got to tell you, only a 6.5% move isn't that big when you talk about Tesla moves. But if I was bullish on Tesla, if I was bullish, I could consider maybe a bull put down here. Short the 250, maybe long the 240. Make it like a $10 spread. An example of that would be, we take a look at Tesla into November expiration. You know, you can see some of these deltas are still pretty high. And then we'd also have to account for the earnings report. But if we forget the earnings report and we just use support base, let's go back to the chart. 250 was support. So if I think 250 would hold, short put at 250, long put either 245 or 240. If I do a $10 spread, that's about $2.50 credit on $7.50 risk. If I do a $5 spread, we're looking at about $1.20 credit to about $3.80 risk, but we could probably get that up to maybe $1.40 in net credit. It's not that bad, but you are getting close to where the stock is trading. I mean, Netflix was at 250 just on Friday, essentially. But if you think the bottom might be in, if I think the bottom might be in, then I could do something like this. Maybe try a bull put spread. If I wanted to go directional, the target right now would be basically your 50-day and 200-day. The stocks seem to have some trouble back up in that area. And then one other stock here, Goldman, it did pop higher today. It was a pretty aggressive move. We gapped up. We did come back and fill the gap, but then closed at the highs of the day. Similar to Tesla, if I think this would be support at 212.50, I could come in here and maybe consider a bull put spread. Even if I go out to November, again, we said 212.50, right? So if I think the market is done going down or Goldman's done going down, even if I would settle for the 200 short put, a 205 long put is 54 cents credit. Not bad in terms of an ROI in relatively short period of time. Okay, so that is it, folks. Wish you guys a great rest of the day, and I look forward to seeing you in tomorrow's video.